What's good, guys? Welcome back. Let me get a distraction. Yo, what? All right. So yesterday I took a trade. Why am I not able to see it? Cause it's the 15 minutes. All right. All right. Welcome back. All right. So yesterday we took no, I took a trade on ES and I won that, making this amount of money. I went short, and there are two things that I think I could have done better when going for a trade, but I'll go over my thinking and I'll ask someone, maybe ChatGPT, to see if that was the right thinking for taking this trade. But hey, anyways, I did made I did win the trade, and I did follow to my plan, which is liquidity sweep, breakout structure, order block retrace, breakout structure, enter, and targeting previous liquidity. So, and by the way, I have this new code. Basically, it's a code, but it's like Asian London and Asian session highs and lows. It basically marks out Asian session high, Asian session low, London session high and low before each session, New York session. So as I trade New York session, and that's important because I trade the ES. And yeah, dude, like whatever. So here, this bluish greenish color is the Asian session. This orange color is the London session. So you can see I just keep this at 8:30 because I don't want this to be overlapped with New York session. Actually, this goes on till 11, but I just keep it at 8:30 so that it doesn't confuse me that we are still in the pre-market or the market hasn't opened yet. So this orange lines are the Asian session highs and lows. So right now we are creating. Oh, hello, hello, no. Okay. So let's get into it. We took this trade yesterday, like this right here. So um, I'll just mark out the important stuff. Actually, I don't need to. Yo, come on, dude. Yep, we are in. So the good thing about this is that this indicator also marks out like this New York session open. So it's really, really convenient for me to, that it marks out these Asian and London session highs and lows, and I just just do this. Just do this. I basically change this to orange because this is the Asian session high, this is the Asian session low. Then the blue is for the London session high and lows, which you can see right here. Yesterday, I should have targeted that, but hey, I'll be explaining how. So yeah, that's the new thing that we got like here, Asian session. Okay, I'm gonna remove these ranks because I do not need this. So uh let's just do it this way. So yesterday yesterday we had London session high right here. Then this was the London session low since the London session just started, and this overlapping is between Asian session and the London session. So this was the Asian session low, and I haven't marked out the Asia session high. Cause it should be this one right here. Yeah, cause again I was going short, so it doesn't matter for me to have these marked out. Oh my god, dude, I have to go to the gym right now. Okay, so oh yeah. So first I'll tell this on the Nasdaq. So on Friday, remember we had this huge move down, but there was a slight retracement on the 5 minutes. So what does that mean? There's some liquidity right here. Liquidity right here. So when I was taking yesterday's trade, uh, you can see here. Oh my god. So you see, cause London session extends till here. This whole thing is like during the London session thing. So London and New York session overlapping. So that's why I just pushed this to 8:30, which will just bring it to New York session open, which is at 9:30. Uh, dude, where's New York? Yeah, which is at 9:30, and I keep it 8:30 because it's like the code is for daylight savings and all that thing. So, anyways, so we had this liquidity right here, like resting right here. Same goes for ES, but let me tell you something. Let me tell you something. Let me tell you something. So you see, this liquidity was right here, but we went way past it yesterday. Oh my god. Okay, we went way past this liquidity right here. My stop loss, well, I'll explain that. This was the actual trade that I took. Like you can see this. Oh my bad, this was right here. Yeah. And then I went short with this candle right here at 67.53.5. And then I bought here at, because this low was made after New York session open, and you see this was, I mean, I cannot say I could have gone long here because this was kind of kind of kind of a liquidity sweep from this, but this low was created once the New York session was open. So again, I would not consider this as a good confluence. Instead, you see this sweep right here. This was the London session high previous to New York market open, and this it swept this liquidity, right? I would have gone short here, but again I would have got stopped out. Why didn't I go short here? Because I did not see a good entry point. Good good entry point. So I did not go short here. Rather, I thought that I'm probably not trading today. Okay, I might just not take a trade today because again, I was kind of late into the market open. Like I started seeing markets around here, these two candles. Oh my god, New York. Hmm. So I was kind of late into the market and its strategy, but again, well, why do I not have? Okay, so this is the new London high. We have the London. This. Yeah, this is the London low. Nice. This was the Asian low. Okay, since I'm explaining why I went short, I'm just gonna mark these London high, London low, and Asian session low. I also don't need this, but just like keep it. So as you see on the Nasdaq, it did not sweep liquidity on like to the downside, or whichever like liquidity was here. It did not sweep that unless this one. So this was the London session low. Oh, oh my! This was also a good, a trade that I could have taken because it swept liquidity, rallied all the way here. But this is not a strong key level, I would say. It is just like a retracement kind of thing. But like when I was looking at prices, like how and where they were going, I will explain on the NQ because this was NQ was the reason I went short, and I should have gone short on NQ, but I went short on the um, S&P 500, like this one, because there wasn't any liquidity sweep yet. I went short because it like kind of gave me two confluences that matched up. One is break of structure, other is the order block entry. So you see on the 5 minute we were going up, and as you know, like you see this. Okay, what time is it? 10:10. Okay, yeah, actually three confluences due to which I entered this trade. Look at this. At 10:10, S&P 500 is making a higher high. Okay, and then at 10:25 it's making a lower high, like it's below the previous high it created at 10:25. So on the NQ, which is the Nasdaq index, at 10:10 we made a high, but at 10:25 we made a higher high. Okay, and my bias was to go short. So where will I go short? Obviously on the ES. So that's why I chose this index to go short of, but the real liquidity sweep happened on the NQ Nasdaq. So you see it did kind of like when closed above this line right here, but on the 15-minute it never, you can say like it never closed above it technically. Like it did open above this line, but it again closed below it, and then the next blue bullish candle also closed below it. So that gave me a confirmation to actually go short, and I did go short, but I went short on the ES. So with that, this is called the SMT divergence. That on the Nasdaq, and since S&P 500 is the leading index, because obviously it's the S&P 500. Like how do I explain it? Yeah, the S&P 500 has more volume than the Nasdaq, and Nasdaq was creating higher highs while ES was creating lower highs. That means this is a manipulation by market makers to fill in their short orders. Why? Because let's say I am an institution and I want to go short, I have to sell, right? For in order to go short, I have to sell, right? And for me to sell, someone has to buy. So that way, with that thinking, I was like, okay, I'm probably gonna go. I am going short here with this, keeping my stop loss probably above here, even though it was a 1:2 risk reward. Then yeah, so like how this was making lower lows, I went, okay, I'm gonna go short on the ES. Then I waited a couple of minutes, and then I got this break of structure with this candle right here. What does this what is this then? It's the order block, the move up before the break of structure. Okay, on the 5 minutes. So on the 1 hour, 1 hour, dude, 1 hour was terrible. Uh, terrible, like literally. Oh, where are we? Okay. Yeah, look at this. 1 hour, terrible. Nothing. Okay, like we had this Asian session low right here, and then London session low. Like even the low was a bullish candle. So on the 1 hour, we had nothing. Terrible price action. 15 minutes. Come on. Yeah. 15 minutes. We did have like these lows that were formed during the price action before market and during the session. So that's why I marked out Asian session low, London session low, Asian session high, London session high. So we had like a clear, a picture on the ES. Yeah, these are like for now. You know what? Let's. Yeah, I'll just explain why I entered this trade. So not to worry. Oh, okay, but I won't be able to see the previous sessions highs and lows. Okay. So back to 5 minutes. So this was the order block that was created. I would have probably entered here off of like, this order block entry. Like, see this bullish candle. It went up to the order block, closed below it, then again, uh, bearish candle. Even this candle kind of entered the order block, so it does make sense. It's fine. 16 minutes. Oh my god. Okay. So, on the 5 minute again, I got this break of structure. I dropped down to 1 minute, and I didn't do this on TradingView. I did this on Robinhood Legends, so it's much precise. Yeah. So you see, I kind of entered on this candle. Actually, I would have entered like right here on this candle, cause I was looking at the Robinhood Legend, and because of that, you know, I have to place market orders. Like I have to just like press sell right here. Anyways, so I entered right off of like this candle closure. Okay, and then it kind of went up. I entered here, going into my red zone in the loss zone, and I yeah, after entering here, cause you see this candle, these two candles, and they tapped into the order block, and then look at this. Okay. mm, SMT divergence, order block tapped in, then this, where, I wouldn't say so. Nah. But hey, order block was tapped in, and then a huge bearish candle. I obviously entered off of that. But then this is showing it there because obviously I took the market sell and then I entered off there. So bearish candle, order block entry, SMT divergence. Three things. Liquidity sweep. Four. Whatever. And honestly, if I were to even go short, even on like, NASDAQ, I would have probably won the trade because you see, this is an uptrend. We got a break of structure with this candle, order block. Okay, order block, entry, probably enter here. Keeping this, keeping this probably up here. I know it would have been crazy risk to reward, but I preferred this because already the ES was moving in the direction I kind of wanted my price. Stop. I wanted price to go towards. Like I was going short, and this SMT divergence gave me the biggest confluence to go short on S&P 500. So once I entered there, I kept my stop loss here. I had a trailing stop loss. So again, add like when the prices when like were around here, I moved my stop loss from break even. This is break even, like where I enter, to here, which was around like $200 in profit, and then this candle kind of tested my stop loss and then went here. So I kind of like had this stop loss like above, excuse me, this candle right here. After prices went in my one direction, and then I switched to this stop loss because this was the order block, and if kind of went over the order block then it didn't make sense, so I had my stop loss here. Then I switched my stop loss to here because you see this is like a bullish candle, and then so if you see, I technically had a 5.32 1 is to 5.32 hour trade, which is crazy, man, which is crazy. Okay, and what did I target? I first targeted, I literally could have targeted this London session low. Where's the London? Yeah, right here. But since this huge move to the upside was made when market opened, I wasn't sure that the prices will go there all the way down, down to London session low. And I was kind of like hoping prices to just like fall below these levels, like uh, these fair value gaps. So my first like take profit would have been here, but I saw how price was moving, so I stuck to the trade, and boom. Like I targeted this liquidity zone because I know a lot of stop losses were right here below this because people were going long. Obviously, people are retail traders, some institutions. But you know the funny part, real funny part. Like when this fair value gap was hit, I saw this, like I was like looking at the charts live. I saw price going up and I was like, okay, probably gonna hit my stop loss right around here, and I might just take $200 in profit and leave for the day. Cause you know why this happened? Cause institutions went short right here. Like I understood the psychology, bro. I understood the psychology. Like when you're selling, someone has to buy. Most retail traders, they thought that okay, this is a perfect time to go long because there's a fair value gap and we are in an uptrend, right? So this price, like you see this wick, right? Look at this wick, and it literally clicked, bro. Like it literally clicked that if institutions want to go short, they have to sell, and in order to sell, people have to buy, and if you buy, the prices increase, right? The price of the underlying stock or whatever it is, it increases. And so this wick right here, stop losses didn't get hit. Yeah, I mean stop losses would have like gotten hit because I think some people might have entered here while keeping stop loss under this fair value gap. But that's the point, bro. If you're selling, someone has to buy. And buying makes this like prices go up. Crazy, right? I saw this. That's why I my first like take profit was right here, And after seeing this, like this huge wick and how it was being created, I know this was like a 1-to-1 kind of trade, but you see this, right? Like where I sold a bought, see, 15th October, which was yesterday, 15th October, yesterday. So I saw this, and also like this, it was kind of a key level because on the Nasdaq, this was the liquidity zone, which was swept, and then prices dropped like crazy. So, and this price action did not close above it. So that gave me another reason to stick to this trade and target these lows that were created during market open. I could have targeted the London session low right here, and then again the Asian session low, which is right here. I would have won both the trades, but as you know, I just like I could have multiple take profits. I can have multiple take profits, but since I only had one contract, I can just like have one TP. I cannot have multiple TPs. Cause I'm not gonna buy like again right here or here and then sell off right here now, man. I entered a trade, I made profit off of it, and I'm leaving for the day. This price action was kind of crazy considering how we were manipulated during the first few minutes of this market open. But again, if I actually think about it, this is institutions going short, probably to, yeah, I mean, if you're going short, someone has to buy it. Institutions going short makes these kind of manipulative moves. But yeah, so my take profits were kind of like under this fair value gap. This does not make sense because this was the inverse fair value gap. So holy shit. So okay. Mm. So yeah, those were my that was my thinking when taking this trade. This fair value gap got obliterated, and then we had this was a high, this was the low. So this, bro. So that was the trade that I took on the ES because of the SMT divergence and this being closer to where I want the price to go rather than on the NQ because this was making a higher high. But again, I'm probably gonna explain if I were to enter. So breakout structure, order block. This was the order block. I got entered, keeping my stop loss around here, targeting. I could have targeted a small at the like this fair value gap right here, still a 1:2 RR. Then I could have targeted this another fair value gap, 1:3 almost, and then the London session low, 1:8, which is crazy, or this new low which was created during market open, 1:8.35. But hey, I took a good trade. I know why I took the trade. Stick I stuck to my plan. This SMT divergence, huge confluence, has a lot of, potential. And if like I was to go short long, and I was seeing like the NQ is making, so my thinking for SMT divergence is whichever is closer to my TP or the direction I want the prices to go in, that's the index I'm gonna enter the trade off of. Off. Ugh. So with that, I'm probably gonna end this video and see, we could have even targeted the Asian session low. Which is wild, bro. This whole move. Oh my god. But again, why I didn't do this, because again, I already made 1.4, uh, yeah, 1.462.5 dollars in profit, and one of the, what you say, one of the condition to pass the top step futures account is that you cannot pass the evaluation in just two trades. Like, it has to be more than two trades, which is basically your, one of any of your trade cannot be more than 50% of the target profit, which is like $3,000 to pass the funded test. And if I were to like extend the TP, it wouldn't have made sense, because again, I'm still in practice demo mode, and I am trying to get funded through Top Step. If you're watching this, please follow. And yeah, I'm gonna keep it as real as possible, and I would have like extended my TPs to like here if I had, like, if it was a live account or I was trading in like I already passed the evaluation on the Top Step account. So obviously I would have, like, extended till here. I would have kept my stop loss like above here again, like the trailing stop loss. I would have kept it here, and then I would have kept switching it to, like, you see this fair value gap that was created like right around here. And then if it went lower, I would have kept it here, and then I would have just kept it here above, like somewhere here. Yeah, like that. I would have kept trailing my target price, and I would have made a really decent amount of money if I was on a live account or a funded live account. But since I'm still in, evaluation, or what do you say, in the test mode, like to prove myself that I'm a profitable trader, excuse me, I kept it this way. With that, that's my trade recap for 15th October. I have this new indicator for myself. ChatGPT kind of helped me make this indicator. This is the whole code, and it basically marks out Asia session, London session, and start off New York session with this vertical line. So if I were to remove this is what I see. And so with that, so you see how this Asian session low is being formed right here. And then, so London session just started, which makes somewhat this the new Asian session high. Anyways, I might take a trade today, tomorrow. Wait, let me. Oof, that's for GBP though. FOMC, but that's pre-market, so we are trading today. Let's go! Alright guys, with that, I'm gonna end this. Peace out. Holy shit, I look black as hell. Peace out. Bye-bye.